Hi, this is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In today's episode, we'll take a look at Heiken Ashi candlesticks. Heiken Ashi candlesticks are great because they smooth out price action and they help us identify the trend as well as stay in the trade longer. So let's go on to the charts and we'll take a look at what Heiken Ashi candlesticks look like and how to take trades based on Heiken Ashi candlesticks.
We'll take a look at how to trade using Heikin-Ashi candlesticks. Heikin-Ashi candlesticks are very good candlesticks to use when we are looking to stay with the trend. So these are averaged out candles. They look slightly different than our normal candlesticks, but the best benefit of using Heikin-Ashi candlesticks is that they help us stay with the trend and help us ride the trend for as long as possible. Here we are looking at Euro-Yen daily chart. So the best way to get into the Heikin-Ashi move is, first thing I'm looking for are two candlesticks. So I want to see two candlesticks in the opposite direction. So let's say price is coming down and we are not in this trade at the moment. So once we are looking for a turn, so we have to wait for the price to turn. So we have to wait for the trend to establish itself. And for that, we want to see at least two candlesticks in the direction that we are looking for the trend to go in. And of course, everything else works just as well with Heikin-Ashi candlesticks. So we are still using our support and resistance lines, and we are still looking for patterns, technical chart patterns as well. So all of that still is valid with Heikin-Ashi candlesticks. As we see two candlesticks in this bullish trend here, we can see two candlesticks. That means price is reversing now. And as we can see, we are at a previous support and resistance level here. We see two candlesticks in the opposite direction. This is the beginning of a trend, so we want to get into this. So this is the daily chart. So two candlesticks is a pretty solid trend at this point. We see that the price has reversed here. So we enter the trade on the close of this candle. So stop loss goes below our low here. We want to make sure we give price some room to breathe here in case we see another test of the low. So once we enter the trade, we stay with the trade here as long as the candles are the same color. So here our bullish candlesticks are blue. So as long as the candlesticks stay blue, we stay in the trade. And another thing to notice here is when the trend is really strong in Heikin-Ashi candlesticks, we won't have any pins in the bottom here. All the pins will be to the upside. So this shows that a strong trend is in place. Once we start to see pins on the opposite side in the bottom, that shows there is some indecision in the market and we have to be cautious because trend could change or price could reverse at this point. So we start to be cautious here. Then we see this red candlesticks. Once you see two red candlesticks in the opposite direction, we exit the trade here. So from entry to exit here, we get 703 pips in the trade. So this is a daily chart. So the target that we have is quite large as well. So the number of pips will be larger because we are trading in a longer time frame. So just to recap here, Heikin-Ashi candlesticks are good candlesticks to use when we want to see the trend, when we want to stay with the trend. So once we see two candlesticks at a strong support and resistance level, we are looking for, first of all, trend to start. So once we see two candlesticks here, that is a good indication that price is turning, especially on a daily chart here. So we enter the trade long here and our stop goes behind the pin here, making sure we have enough room for the trade to breathe, and we stay in our trade as long as the candlesticks don't change color. Once we start to see pin in the opposite direction here, that gives us a caution, a warning. That means we could see a trend change here. And as we see two candlesticks in the opposite direction, red candles here, that's time to exit the trade. From entry to exit, we get 703 pips in the trade. So our profit is 703 pips or $7,030 if trading one standard lot.